Afternoon. I'm looking at the moment at the monthly S&P chart, and you can see that February, well, let's look at January. January over here, as you can see, tried new highs, closed at the low on the month, and here in February we had a key reversal month. That means a higher high, a lower low, and a close below the previous bar's low, which basically is what we've done, what we've got. Now, we started March quite positive, and we are currently trading on the S&P up at 30.91. We're not open yet, but pre-open we're trading at 30.90. Now, you can see yesterday we closed at 30.90, so it's unchanged basically on the day. We've got the Dow up slightly. The markets are trying to recover. Now there are three levels that I've put on the chart for you. The first is the monthly pivot point. That's coming in at 3022. Sorry, it's not. It's coming in at 3067, and that's in the red line. The blue line here is coming, that's the weekly pivot. That's coming in at 3022. And the aqua line coming in here, which is the daily pivot, is coming in at 3041. So we're obviously above those levels now, and what we need to do really is to stay above it. That's the point. We need to stay above it. And if we can stay above that 3067, then I think we're in for a bit of a retracement. You can see, right from day dot in 2008, there's the bottom of it. Let's screw it up a bit. That was your inverse head and shoulder pattern that signalled the end of the bear run that we'd seen, and that was quite astounding. So when you look at it in percentage time, this is only a little blip. It's just a little blip. We saw the same sort of action you can see in 2018, so I don't think there's anything really to worry about. Obviously, if we do start breaking lower below this area, you've got the October 25th, you've got the October low here coming at 28.55, and February's low was 28.55. So you've got the 21-day moving average coming in now at 29.11, but you've still got that 28.69 to 28.55 area that is really going to be crucial to this. Now, if we look at this and see what it's done, you can see that on the whole of the move higher, we haven't even touched the 23.6 fib. So the market as a whole hasn't corrected anything like what it should be doing. So what we've got to do is we determine that it's still in an uptrend. So what I'll do is I'll take a look at the weekly, and you can see that obviously the February action really happened last week. So, it's a bit of a false economy, I think, to say that the bull run is over. Yes, it's took a hit, but we've been here so many times, 2016, 2018, and always the stock market has recovered. That's the nature of the stock market. However, that doesn't mean to say that you can't nick things out of the way intraday. So if we take a look now at the daily, you can see that this market wants to correct higher. So what we'll do, we'll take a fib level from here. So we're going to take it from when the market actually started to want to fall. So we're going to take it from here right down to that 28.55 area. So we are approaching, or the next level I have is the 50% fib, and that's coming at 31.25. Then I've got 31.47 as another level, and then I've got 31.89. So you've got to look first at the daily pivot, okay? And that is at 30.41. We've just opened, we're basically unchanged. 30.87 trading. Look at the 200-day moving average as well. That is coming in at 30.49. Okay, so let's have a quick look at the Dow, and that's really the same sort of pattern. We'll take it from that point to that point there. And really, I mean, we're trading at 26,676 at the moment. You've got a lot of overhead resistance at 27,142, 27,246, and that trend line that's intersecting with the 50% fib level coming in again at the same level of 27,156. So around this little glut of resistance here, I think the market's going to come under pressure. You've got a little bit of a gap, and the gap is down to 26890. It didn't fill it. So just remember that 26890. If we do make it past there, we're going up to here, and this is where I think you're going to see quite a bit of selling pressure. You've got the daily on both the S&P and the Dow. You've got them both pointing higher now after coming off of extreme oversold levels. Okay, the market as a whole wants this to go lower. Let's just get that out of the way. There is this air about it that it wants to smack any rallies. The problem with that is when everybody feels the same way is the time when the market reverses. Now, it's had a good correction off that 28.55 area, okay? So in my little brain, we've got a double base. Just be careful. Don't get caught short, all right? See what it happens. See what happens to it. If it can stay above the designated resistance support levels that I've given you and get to the designated resistance levels that I've given you. Good luck. Sorry to have dragged on, but I had quite a lot to say about these markets today. I'll catch you on the desk.